What's good, y'all? It's HB Punch and Profit. We are going to break down the price action for December 7th, 2024. We're going to run from 9:30, the 9:30 opening, all the way to 12:50 to 110 macro. Uh, Now, I want to break down a scenario in which you don't understand higher time frame, but you just take the signals I give you every time they present itself in a day. Okay, and hypothetically speaking, would you come out profitable, even if you didn't understand the higher time frame and you were just taking every signal at will? So I'm debating whether I should do the market replay, and we probably will, just to see how profitable you can be. This is not going to be very accurate, right? Because it's just a market replay. So we're going to use 1 mini on the Nasdaq, and let's see what happens. So at the 9:30 opening, we get a signal right here. There is a bearish fair value gap. Boom, right here. Make sure you take into consideration volume imbalances. And if you zoom in, make that bearish, and there's a volume imbalance here, so that wick doesn't count on the inside, and you get this bullish fair value gap. So there is your overlap, and you get a candle close above the advanced market structure shift. So I'm going to take this off, and I'm going to turn this orange, just a rough estimate of the inversion. Advanced market structure shift right here. And I actually took this trade. I had a little bit of a late entry because I want to see this balanced price range get closed over. And so I roughly had an entry around here. It's no big deal. The market just ran up. So this would have been your advanced market structure shift if you took it in the A plus typical way. Stop at the low. And let's say we bought roughly around here. Stop at the low, take profit 50 points. So we'll just throw take profit roughly around $1,000. So price runs up nicely, little to no drawdown at the advanced market structure shift, and even when this balanced price range gets filled right here, little to no drawdown still. Now I wanted to see this get filled first because we took the London high. This is an inversion essentially, and we did get this advanced market structure shift, and I just wanted to see if we were going to come back up, not fill this balanced price range, and push back down. But as soon as we filled this and closed over it, I was in, and it didn't really make a difference that I entered in late because it was a nice push up. So that was your first signal that presented itself. Now you get the 950 to 1050 macro. Okay, nothing coming down. Now I'm going to show you guys an alternative way to scalp when you get a market that wants to push in one direction, especially when you don't get any sort of retracement back into the 930 first fair value gap printed after 930. I believe it's this one. We get no retracement and the market just blast off, right? This is not an A plus clean setup. I don't usually like taking this, but it can be a nice scalp from time to time. You just have to be very careful that you don't get caught in a range that just expands down. So let's check it out. So you do print this bearish fair value gap, right? Volume imbalance right here. Very small one, but it's there. And when you print, if you know the market is pushing in one direction, right? As soon as it has a little pullback, like this little fractal pullback on the 1 minute time frame, prints a bearish fair value gap. As soon as you close over that bearish fair value gap, okay, or vice versa if you're bearish, if the market is pushing down, okay, and it doesn't have to be a clean balanced price range. As soon as you close over that, you can buy, right? We're buying a little early because it's market replay. We'll put our low right here, put our take profit at the high. You're not aiming for 50 points. It's just a small scalp. You just take the low hanging fruit in this occasion because this is not the A plus setup. And you don't know if you might come back up, invert something, and then either you're going to have a massive reversal or you're going to be stuck in a range and it's going to expand lower and you get to get stopped out. But from time to time, you can take this trade and it plays out. Boom. That is one of the little scalps you can utilize right there. But you really have to understand price action and where it wants to go on a higher time frame. But we'll take like $400 off. We won't count that one. I just wanted to show that. So we push higher. Okay, boom. We get an inversion right here. Bullish fair value gap. Make sure you take into consideration the or volume imbalance right there. Very subtle right here. Very small. So bullish fair value gap inverted by this bearish fair value gap. Okay, we close over it. Boom, right there. So there's your inversion, bearish inversion. We'll turn that orange. Okay, you would put your stop right here. You wouldn't enter yet. You would wait for that advanced market structure shift if you're trading against the trend or expecting a massive reversal. Okay, so you get this. Now, there's a few ways you can play this. If you get this type of inversion and you're trading against the trend, right? Not the cleanest one. It's very choppy. You do get the advanced market structure shift right here, but price doesn't just trickle down, right? What does it do? It pulls back and it closes on the bearish inversion. Now, this high right here holds strong for now. When you get something like this, you get the inversion and you get the advanced market structure shift and you get a nasty retracement like this, what that's pretty much telling you is you're going to start ranging. You're going to start consolidating. So you say you took this signal because you got the advanced market structure shift. Okay, you put your stop at the high and you get this big pullback. It's hard to sit in, but if you sit in it and you recognize what's going to happen, okay, we're consolidating, we've pushed up, it's a bullish market. What you need to be thinking is, I need to get out as soon as possible. Either I need to get out as soon as we get at break even, or maybe I'll take a smaller target, right? 25 points isn't bad usually in these conditions, maybe 15 points. Honestly, I'd probably suggest, I'd probably go for 25 points, okay? Or because I don't want to be in a position to where I'm trading against the trend, trying to break even. So, I mean, pick your poison, okay? But you're not in a terrible position. Your stop, technically, if you honor the trade, is going to hold you strong, hold you good. But you need to recognize, if you get a nasty retracement like this, you have to recognize you need to be modest about your target going down, or you need to get to break even as soon as possible. So you get close to 50 points here, but you don't quite get it all. Okay, so right here is 50 points. And another thing you can do is you can pull your stop to break even after a 25-point push down, right? That's one of the things sometimes I encourage people to do. And look, you do get a nice move down. Let's see if it can hit 25 points. So right there, once you knew you got this nasty retracement, oh, we're consolidating. I don't know if we're going to get our 50 points from the advanced market structure shift, so I will take a quick scalp for 25 and I'll get off the board. Or what I'll do is bring my stop to break even or a little bit below it, maybe 15 points, right? And I'll get a small profit and then I'll wait for the trade back to the upside. Or you just sit in the trade, see if it hits 50. And that move right there also tells you we're ranging, we're doing this whole bull flag pattern thing right here, right? So once you see we're ranging like this and we're expanding down, what you want to do is wait for a move back up. Now this can be tricky because you have to wait for, you have to find the low, right? Or you have to wait for the low or wait for the breakout, either one. Waiting for the breakout is probably the most ideal thing to do and trade it like a pattern day trader. So let's see from here. We're going into 1050, 1110 macro. You're still stuck in this trade. And you get one more push down, but guess what? Doesn't hit your target. 49 points right there. You missed out. But if you're managing your risk, 25 points, after it pushes 15 to 25 points, bring your stop to break even, you wouldn't have taken a loss. Okay, so you would have been straight there depending on how you manage your risk. Now, if you want to technically, if we want to say this was a loser, okay, 20, about 20 points, 23 points, that's about like, what, $460 loss. So we can take out like $400 out of, and we're up only like $500. Now, this here could have been a signal, right? In the 1050, but you were in a trade already. Now maybe you saw this and it's like, man, I need to get out of that trade and I need to get in this. Well, unfortunately, you'd have been stopped out here. That's what I mean. It's just part of the game. There's no strategy that's 100%. But let's say you freaked out, you saw this, and you wanted to jump out of your trade and you took a little profit, or maybe you missed it altogether. So let's mark it up. Inversion, roughly speaking, right here. Stop at the low. Advanced market structure shift. And you get stopped out. Now, because you're trading with a higher time frame, as soon as you close over the inversion, which would have been roughly around here, that's a big loss, man. It's a big loss. So let's do calculator. 20 times 31, 620. So you would have been, if you'd have pretty much been at zero at this point. That was a losing trade to get stopped out. That's that. Now, once again, you get another signal right here. Wait for the advanced market structure shift. Okay, you expanded lower in the bull flag pattern. Let's see if you can get a close. We'll take that. Close enough. Boom. The stop low right here. I'm going to aim for 50 points. Boom. Let's see what happens. Tough trade to sit through. Brutal, still in that bull flag pattern. Not bad drawdown. Entering the 1250 to 110 macro around here. And let's see. you hit your target. So even if you took every signal, you would have made $1,000. Okay, if you were trading minis. Okay. Now there were also other opportunities to go in. Now essentially all this was, you had to sit through this whole bull flag pattern, and that's something you really have to get good at, kind of understanding. I guess you could have said this right here. Maybe it broke. See, I don't know how pattern day traders trade this thing. I guess they wait for a break, a retest, and then boom. But essentially, that's kind of a rough bull flag pattern. Something like that is probably not the best interpretation, but yeah, that, so when you get that choppy inversion, right, going against the trend, it's usually indicating we're going to start ranging. And there's lots of different ways you can kind of play with it, but the safest way is to trade with the trend. You're waiting. The tough part is finding where that low expansion is going to be, because it can be, this can be convincing when you're in the macro, like, oh, inversion, advanced market structure shift, and then it expands lower, right? The bull flag expands lower. So I guess the best way to kind of play it is wait for two big expansions. Okay, you have one right here, and you have a second one right here, and then either you can play the second one or you can wait for something further down the line, right? Say you didn't take this one because you were just not confident in where the low was going to be. There was a signal here, essentially, at the 1150 to 1210 macro. Inversion in here. As soon as you close, okay, you don't have to wait for the advanced market structure shift. Stop at the low, you've been just fine. And you run that up for, if you got in roughly around here, 50 points. So that was another signal you could have taken. And then this was one I actually got a live execution in from, it's not marked on here. Let's mark out the 1250 to 110 macro. Okay, 1250 to 110 macro. Guess what? Get another signal. Inversion right here. Advanced market structure shift. Now, this one, I wouldn't run up for 50 points. Why? Because we're making all-time new highs, and that's why I took my take profit at the high right here. So this was my target right here. It was just a small little scalp, but because we're making all-time new highs and we're not really at the opening where we're going to get those explosive moves, we're getting close to the back end of the day in the afternoon. I'm just looking for a quick little scalp. Plus, we've been pushing very high. I don't know if we're going to reverse anytime soon. So, take a little modest little scalp here, enter in as soon as we close on the inversion, and we just aim for this high. That's still a nice chunk of change. So roughly around here, still a 16-point move with a mini. I believe that's almost about like $350 or something, $400, something like that. It's a nice little scalp to take, and you can approach scalps that way. Plus, a little bit more it gave you. Might have pushed higher. I don't know. Let's see. All right, so that, yeah, that's exactly why I took it at the high. But it did offer you a little bit more than 16 points. Well, let's see. From here, I mean, about 39 points, right? But when we're making all-time new highs, we have no price action to the left to the reference, and so we've been pushing higher already. I'm just gonna take that low-hanging fruit right there. So you would have came out very, very profitable, even with the loss or two. Even if you have no idea what's going on with the higher time frame, but it's best that you start understanding the higher time frame so it's easier to find these signals. And another thing is, you're not supposed to take all these signals, right? You could have been done after this. That's $1,000. You made $1,000. How many people in the world make $1,000 in a few minutes? Okay, so once you make your money, right here was your first signal. You're done. You got $1,000 for the day. Okay, I showed you another way. A little scalp you can take advantage of. You can be done there. Okay, or you can be done after the first two. Over here, even though it didn't hit your 50 point, it was 1 point off of your 50 points. If you managed your risk, you could have came out profitable, at the very least break even. Okay, you take this, you probably wouldn't have even gotten in this because you've been stuck in this trade, right? If you took this trade, massive move, big move. You would have missed these right here, wouldn't even been because you'd have been waiting for this to play out for 50 points. Or say you skipped this one and you came to this macro, boom, right here, profitable trade, 50 points. Or the 1250 to 110 macro, not bad, take low hanging fruit. So the objective is not to take every signal, right? The objective is, if you can be one and done, be one and done, especially if you made a healthy amount or you get two trades, right? All you need is $500 Monday through Friday each day to get $10,000 a month. You're in the 1% of earners in the world. Okay, so this is the signal. It's a beautiful signal. Even when you lose, you can come out on top. Don't overcomplicate it. Don't overthink it. When you see the signal, execute the trade, hold your stop, or manage it when you notice you're consolidating or moving up to break even. Be modest about your targets if you're not sure where price action may go, and you will be profitable. This is HB Punch and Profit. Comment down below, like the video, subscribe. Peace.